our community economy, but prices for rent and other essentials
through their forward guidance. And they indicated the reason that they were doing that is there was uncertainty, and it seems to have been timed somewhat with the uncertainty around trade. So I would just suggest for my colleagues, I don't know if you can respond to this or not. I won't ask you a tax question, but I really want to, but I know what your answer is going to be. You're a good dancer. I think that it is fair to say that if there is going to be a correlation to increasing prices, and Walmart having made the decision to withdraw their guidance is probably the best testament that they know that they may have to deal with cost and maybe inflationary uncertainties. Would you characterize that as maybe a likely reason that they withdrew their guidance?
It might be. I saw that they had. I didn't have a chance to go back and check why.
Well, if you tease through the language, it seems almost certain that they think that some of their input costs were going to go up, and they need to manage their margins. So I'm just telling my colleagues, we just need to be realistic that if you have a major household name withdrawing guidance because of uncertainty, they've got a lot of experts that probably are suggesting there may be some inflationary risk. We haven't realized it yet, but I think we all need to keep our eyes open and not look past it so that we can manage it if it comes to pass. I don't think that there should be a problem with that.
Thank you.
Now, the last thing that I just want to mention is that you can't respond to this, but I will tell you, if the Democrats succeed in preventing us from avoiding the biggest tax hike in the history of this country, it is going to cause great damage to the people who can least afford it. You don't get to respond to this one, but folks.
Senator also Brooks is next.
Oh, I'm sorry. I didn't realize she was here.
Yes.
I'm sorry.
We were,
but we need to open that. We need to be open. We need to understand that you will have something to fix if we fail to continue the tax cuts.
Thank you, sir. Senator also Brooks.
Thank you so much. First to Chair Scott and Ranking Member Warren, thank you so much for hosting today's hearing. We thank you also, Chairman Powell, for your tremendous service to our country. I've very much enjoyed the meeting that we had earlier this year and look forward to working with you. Many of my colleagues today have been listening to this hearing, have rightly discussed concerns regarding how tariffs are affecting consumers and businesses. And I'd like to highlight a specific business in Maryland that encapsulates the harm that I believe this administration is inflicting, but also the resilience of a proud Maryland small business. Bay Dog is a successful pet brand based on Kent Island.
Percent of this, we're talking.
Is that Ms. Douglas? I would to agency
that conversation. That would be helpful.
Look forward to doing that. And if you'll allow me to say one more sentence, none of those things were the cost drivers. You know, the real thing is what were the cost drivers that caused the spending to increase, and we have those too. But those are not the things that did that.
Well, I don't want to
look forward to the conversation.
I don't want to eat into Bernie Moreno's time because he's kind of cranky when I do. I would just suggest that when I hear that things are completely and wholly inaccurate, and then I hear that they weren't quite the way they were, those are two very different framings of the conversation. And I only read page 129, 127 through 129, page 37, page 40, 41, page 65, page 129, because I could be wrong without a question, but I don't want to be misled. That's different. Next would be Senator Reed.
Thank you very much, Mr. Chairman, and thank you, Chairman Powell. Many times you've been asked about the status of Fed independence from the president, his constant harangues about interest rate policy, et cetera. But over the past year, we've also seen judicial pressure on the Federal Reserve's independence. The Chevron case, which dramatically eliminated the deference to agency decision-making, also extended the statute of limitations on the Administrative Procedure Act. And there is a strong sense that they're about to overturn Humphrey's executor case, which will eliminate the independence of practically all agencies. What's your judgment on the cumulative effect of these judicial actions with respect to the Federal Reserve's ability to do its job?
I mean, the net effect of all of those will be to make courts substantially less deferential to agency decisions. And so that's just the new world we live in. We'll continue to do our jobs, and obviously we'll respect the law as it is. That is the way the law has been evolving, though.
But there is increasing pressure on the independence from the White House. And do you believe that if Humphrey's executor's case is decided in a way that gives the White House more additional authority, that'll be invoked against the Federal Reserve?
Yeah, I'd rather not speculate, if I may, Senator.
That's quite all right. The U.S. dollar. I remember when the phrase was sound as a dollar. That phrase is getting less used these days. In fact, Bloomberg reported last week that foreign companies are demanded to be paid not in U.S. dollars, but in euros or Chinese renminbi. First, what benefits is a strong dollar?
No one will ever conduct global trade in yuan or the renminbi. The renminbi is the Chinese global currency. The yuan is their internal sort of like monopoly money, Chuck E. Cheese tokens. No one will ever use the yuan, ever. You guys have traveled before. Europe, South America, Asia, Africa. No one will ever accept a Chinese renminbi for any good or service. That should tell you everything.
Capital markets, all of those things remain intact. And I think being the reserve currency doesn't last forever, but it's quite a durable equilibrium. And I suspect that we will be the world's reserve currency for a long time to come.
But you're seeing indications that confidence in our currency is eroding in some places. Is that
I wouldn't say that. I think it's this is a very fundamental kind of foundational aspect of the global financial system, is the role of the dollar. And markets move around. Markets are digesting information that's sometimes very challenging to digest. I'd be very reluctant to come to any longer run conclusions about things that fundamental this quickly.
All right. If you guys are watching this on YouTube, just a heads up. So masterclass starts June 29th. So you guys have 4 more days to register for the class before we get started. This class is going to be a little bit unique because we're actually going to add an additional day for an intro to trading. So if you guys aren't as comfortable with your technical analysis, your understanding of risk, your understanding of just overall basics of trading, this one's going to be the best master class we've done. Use code ChartAddicts in order to register. The link is in the description. I'll be traveling. I have some weddings to go to in Lebanon. Pray for your boy, because I'm stepping into the war zone. All right, that's how much I love family. I'm stepping into the war zone for a wedding. So I may not be streaming as often, but if you guys want to learn this strategy for yourself, you guys want to stay connected with the group on the private member side, click the link in the description, use your code ChartAddicts. See you guys there.
Correctly.
well,
And yes, members, you guys know exactly what you're looking at. So I did enter shorts. I am in these shorts currently. We broke under the 88.6. And so I do see this as, here's our range. Okay. As soon as we break back inside this range, I'm kind of looking to take the sells down to 22,200. We're going to get I believe we're going to get a quick scalping opportunity from here and then break under before we continue. I see a Model 2 happening. Obviously, this is the make or break. The pre-session range is right here, which we are currently retesting. So if the market holds this zone for support, it's going to reject this 22,200, 235 area, keep going up. We made history. We just broke all-time highs. 22,400 for NASDAQ. Clap it up, everybody. We've been trading NAS. We just saw history being made, all-time highs. It turns out World War III makes people uncomfortable. And any negotiation or talks of negotiation like a ceasefire with Iran brought in so much optimism that we just hit all-time highs. So because of, like, the market runs on either certainty or uncertainty. If we don't know we're going to go into World War III, the markets typically kind of park their money on the sidelines. And when I say markets, I mean the largest global capital allocators, whether they be pension funds, hedge funds, large-scale asset managers like BlackRock. Sidelines used to mean cash, but now it means cash equivalents, kind of like bonds. So you can still make a return on those bonds like 4 or 5%, and you're not taking the risk of the fluctuations of the market. Now, as soon as we announce that there's world peace, that's where certainty steps back into the fold, and certainty leads to optimism. So we can see NASDAQ continue to rip, retest these higher floors kind of in the middle of these ranges and continue to fly. This is very possible. This is not about market dynamic, or this is not about market structure. We're in all-time high territory. This is about sentiment, feelings, emotions. All right, so we study narratives, which is the story. So first there's the sentiment. How does everybody feel about this market right now? Well, we've been running hot for a little bit, but so if you ask me personally, I would say that we've been running a very aggressive bullish run, met with some uncertainty, but every time Trump has a win, there seems to be a new high being created. The narrative here is, as long as we're not in World War III, there should be a continuation of this trend. Now, if you look at the mainstream sentiment, if you look at Bloomberg, CNBC, or Yahoo, they're going to tell you that there's a recession incoming, war, this, that, and the third. So they're kind of fear-mongering. So the sentiment is the feeling that you get about the market, and the retail traders' feelings are irrelevant because we only control about 6% of the total market volume. And so let's look at the sentiment of the largest capital allocators. How do they feel about the market right now? Are they certain or uncertain? Then we skip to the next phase, which is narrative. Narratives are stories that we tell in order to keep track of what the fuck is going on. Stories are what keeps generations going from millennia to millennia. Stories like the Abrahamic religions, those things surpass the test of time around the campfires. They are how humans communicate ideas and keep a standard structure and continuity. So the narrative of the market right now is Trump doesn't, if you're an anti-Trumper or if you're kind of like looking at mainstream, you'll say Trump doesn't know what he's doing. There's instability, there's indecision, and that should make the markets crash. Now, if you look at, let's say, more optimistic sentiment, and then their narrative will be like, as long as we don't get into World War III, the markets will go up. It's a story that you tell about the market that will help you understand where you are and what the market might do. Now, the most important conversation I've ever had for economics, it's on our YouTube channel for fucking free. It's with one of the top economists in the world, Bob Elliott, who used to be the head of Ray Dalio's personal investment team, the largest hedge fund in the world. And he explained to me the difference between narratives and dynamics. Now, mechanics, guys, a mechanical thing is something that you can observe. So like the inside of your watch, the inside of a clock, the inside of a car's engine. These are mechanical functions like pistons, where if there is an output on one side, there's an input on one side, there's a predictable output on the other side. All right. So mechanics are things that are quantitatively and qualitatively observable. Narratives are not. You can't like show me the narrative. You can't like point to it. Is it in the room with us right now? Answer is probably no. Right? And so the difference between a dynamics, like the market dynamic, for example, is just, if you look at all the different mechanics, the different unemployment rates, how if you inject money here, money comes out here. If you lower the rates here, prices go up here. These are dynamics, these are mechanics. And if you add them all together, you have like the market mechanics. Fucking hell, I'm switching this around, ain't I? I'm kind of distracted by the fact that I'm in profits here. So I'm actually going to reduce risk on this. I'm going to keep 2 contracts open. 2, 3, 1, 2. I only need 2. If we break past take profit 1, I'm going to move my stop loss to break even here and just let the rest of this ride to the bottom of the range. Should be a pretty good max profit day. Okay. So back to it. 2 sides. There's the narrative. There's the dynamics, the stuff that you can actually see, measure, and count, versus the stories that we're all telling, the hype, the guy in the Discord chat saying the markets have to keep going. That's the narrative. That's the story. And so if we look at the truth first and then build backwards, that's what gives us our edge. That's why we're even watching something as stupid as this circus show with Jerome Powell testifying. We watched this yesterday. Predictable answers, predictable questions. It's all bullshit. Now, if we look at the data, though, whenever he was talking yesterday, I was on the Federal Reserve Economic Data website for the St. Louis Fed, and I was fact-checking all of his claims. When he says unemployment has been stable and has been at relatively historical lows, okay, is he bullshitting us, or can I fucking read a chart? The whole point of you guys learning how to trade is not just so that you guys can arbitrate between the long and short positions and then make money on the difference between price changes. That's interesting, and you will get rich. Fun. It's also to understand how the fuck the world works around you, right? So these guys can sit here and do this charade, all right? Congress or Senator Warner, and then Jerome Powell can sit there and go back and forth and trade some big words. Fun. I can get on the Federal Reserve Economic Data website, and I know what an uptrend looks like, and I know what a downtrend looks like. I know what the 1-hour chart, the 1 yearly chart, and the daily chart, the differences between those different timeframes are. And so I can go and look at the different perspectives and build my own story, the truth. And that, ladies and gentlemen, is the beauty of being self-informed and not being sheep. If 99% of traders lose and 99% of traders don't do that, the key to success might be doing what the failures won't do. If you want to be part of a 1% group, the 1% of basketball players, the 1% of UFC fighters, the 1% of CEOs, the 1% of artists, the 1% of classical musicians. If you want to be the top 1%, you got to do what the 99% are not willing to do. You got to know your stuff. You got to look at the stuff yourself and not get led into the slaughterhouse just following the blind consensus. That's the difference. If 90% of people are short, you have to be part of that 10% that says, you know what? I think it's going to go up, and I'm going to buy here against the market, against all the market consensus right now that's making price do this thing. I'm going to buy here instead of sell. You have to be contrarian. So if you're not willing to do that, kiss trading goodbye. If you are willing to do that, welcome to the channel. You found yourself at the right place. If the market breaks back above my entry and closes above, I'm going to close this trade. I'll enter again at the double top for the sells. Okay, if we do respect the range and we just end up continuing to the downside, awesome. That's just better for me. If we do not, though, and we continue to pump up, then I'll just wait for this 88.6 double top. I can short again. Pretty simple. Just wait and short, right? Or wait and go long. Trading with the trend is going to give all of us a better chance of success than shorting. However, I got shit to do. I have a flight to catch tomorrow, and I don't have time to wait 12 hours for the buys to hit. So I'm going to make do. I'm selling at the all-time highs. I can justify that to myself as a rational reason to enter. And as long as the market doesn't give me candlestick confirmations against my trade, I'm going to plant my fucking feet here. And it's McDonald's or Maldives on this trade, people. Let's run it.
Good
All right, all jokes. I'm in 2 contracts.
topic in my last minute. Stress tests, really important. Those of us who are involved in Dodd-Frank, really important as we try to particularly think about the most significant banks. But there has been concern, I've shared some of this concern, that the stress test process was so opaque that while the regulators may fully have understood, sometimes the very banks being regulated didn't understand fully the criteria. I know you're taking a look at how we can bring more transparency to the process. When do you think we'll see that, and what kind of changes do you think we'll make?
Well, later this year.
Banks pay billions of dollars to lawyers and HR analysts and legal representatives. They know exactly what the rules are. They look, guys, remember this, because again, as a trader, you do have to be a contrarian thinker, and you really do have to kind of be on this mindset of like looking at the truth. Banks will pay out $5 billion a year on average in fraud, whether it's manipulating gold markets. You can just go on Google and say, banks manipulate gold prices, pay fine. All right. Look this up on fucking Google and look how many articles come up. JP Morgan to pay $900 million for manipulating precious metals markets, right? Go to the next one. Oh, it looks like JP Morgan got thrown under the bus. The truth about gold price manipulation. Goldman Sachs, HSBC, and others to pay $20 million over gold. This is 2024. Barclays slapped with $44 million fines over gold price fix. The banks rig the show. And it's just like, a lot of these other sketchy businesses, they'll pay $5 billion in fines in order to make $100 billion on trading. Dude, I saw this breakdown of US commercial banks profits in 2024 pie chart. Let's see if Google's actually this good. Dude, I want to show you guys, banks are supposed to make money off of lending activity and then interest on debt that they have outstanding. I think it was like 70% of their profits came from Forex trading last year, which is just like price manipulation of the markets and then just making guaranteed money. FDIC quarterly banking, fourth quarter. Look at this. Full year net income. Yeah, they're all making stupid buku money. Quarter over quarter changes, not interested. I want to see the split. Loans versus securities, unrealized versus realized, past due versus non-concurrent, non-owner occupied, non-farm residential. What the fuck? Dude, we're in the weeds now, people. We're in the jungle now, brother. We're in the thick of it now, friend. Non-concurrent, quarterly credit loss preventions, Command F. Huh? Let me see. This entire thing is about bank profits, and the word profitability only shows up one time. Fraud. Which bank made the most profit? 2024 by service. Trading revenue. Please give me something good. 2024, the global trading revenue for investment banking for global markets reached $206 billion. That's bullshit. That's a very light number. Marking an 11% increase compared to the same period last year. 11% on $200 billion is still ridiculous. That's nuts. Year-on-year growth, 11% increase signifies positive trends compared to the first half. The markets are growing at a rate of 10% or 11% a year right now, the trading markets. Okay, so the Office of the Comptroller of the Currency is the one that used to actually print the money. It was it was like the US Mint would sort of like have the legal authority to over the printing press, but it was the Comptroller of the Currency that basically controlled the flow, the dissemination, the distribution of that money. Washington, the Office of the Comptroller of Currency, quarter total 1,200 uninsured. PDF. Let's get nerdy, people. Fuck Jerome Powell. Not fuck Jerome Powell, but that shit don't move the markets, let's be honest. Okay, markets are back on the move. Is it safe to move my stops to break even? Safe is a very relative word in trading, but I will move my stop losses into break even. Not because I don't think the market can hit my stops and continue to the downside. They definitely can. But this is the point where we've already retested the top of the range, kind of like a hook and sinker. And if the market is going to drop to the bottom of the range, I'd like to see it in the next few candles here. Whoever is not muted up, if you wouldn't mind muting the mic, that'd be awesome. While I read through this for a second and I give my feedback on the exact split of the profitability of these banks, we're going to continue to listen to this press conference that just concluded.
Has the
the Fed Reserve made any changes to strengthen its internal counterintelligence and security protocols since the development of these incidents?
So that's an incident. And I would say we take it very seriously. We have quite a lap.
All right, so this is easier. This is easier than I thought. So it looks like the big banks are trading Forex more than everything else. So there's equities, which is stocks. There's commodities like gold and precious metals and wheat and sugar and coffee. There's credit, there's the global credit markets, and then there's interest rate differential trades where you can arbitrage interest rates by either buying bonds and selling, there's whatever. You can look at the percent changes. It looks like there was less interest in everything except for Forex. Forex, they grew by 40% in terms of their total revenue, their gross revenue. Everything else is negative. They traded less commodities, less stocks, less interest rate instruments like bonds, but they went 40% increase on Forex. So FX trading seems to be the biggest driver of banks' revenue right now, even though they're supposed to be a lending institution.
Of the capability and capacity so that customers have real-time access to their money. So I just ask that we continue to work on that together. You agree?
I do.
I thought you might. Thank you. So I want to ask you about the student loan situation in the country. And you've talked about this in the past, and you've talked about how it can be a drag on the economy, especially when it gets to be very high in terms of balances that cannot be paid. According to the New York Fed, student loan balances grew by $16 billion to reach $1.63 trillion in the first quarter of this year. Data shows an uptick in the student loan delinquency rate overall, the age of delinquent borrowers, and the number of newly delinquent borrowers. The Department of Education, meanwhile, restarted debt collection activities last month. And starting in July, nearly 2 million borrowers could see their wages being garnished. Meanwhile, here in the Senate,
wage garnishment for student loan debt is about the most fucked up thing you can do. The only reason that kids who are 17 years old got into student loan debt is because the government guaranteed those loans. Say, yeah, we'll back it up. And then now they're like, yeah, we will literally take money out of your paycheck if you don't pay on time. If you're struggling or whatever the fuck it is. That's kind of crazy.
In your testimonies, that student loan debt can negatively impact borrowers' ability to fully
Marcus, you mind muting the mic up?
participate in our economy, and that it can weigh down on the economy overall. Is that still your view?
Yes, it is.
And could you just share your assessment, just from a factual perspective, about how this problem?
I got a feeling we're breaking this support. So because I'm already in these shorts, if you guys are going to take this buy, make sure it's a scalp to the TP1. All right. So layer your trades, put one contract, let it go down to drawdown, put 2 or 3, let it pop up, close everything, walk away. There's a very good shot that we just hit that TP1 and then continue for a Model 2 here. So do not overstay your welcome. You guys know the 10 rules. They are there for days like this.
See, the one exception.
They're there for administrations and presidencies like this. Those 10 rules will keep you safe.
Borrow to invest in their education. That we do not forgive. It seems like something for Congress to consider. That's all. It's none of the Fed's business, really. Ultimately, it's not a big macroeconomic thing. But I've said it before. I said it again.
Mr. Chairman, I appreciate your breaking your own rule before, and I appreciate your
I won't do it again.
now. I could not agree with you more about the anomaly in the ability to.
You guys will notice I do have a buy limit right here at the 88.6 on the buy side. So I do intend on just catching, but one contract is not going to be enough for the scalp. So by the time the market hits that first order, if I go into a bit of drawdown, I'm going to enter probably 2 or 3, ride this thing up to that neutrality zone, and then the rest is in God's hands. All right.
Came from another committee where I'm in the ranking member, so I apologize if you already talked about the
last
tariff.
announcement before we just let this hearing play out. If you guys want that article with all the breakdowns of today's news, it's on our website. It's also in the link in the description below. Sign up to the newsletter, get the daily updates on what the biggest news events are, not the bullshit news events that everybody else is talking about. I get it. I'm going to turn the channel and everyone's talking about that one thing. You guys are going to get the news that actually impacts markets. Click the link in the description, subscribe to the email list. It's at the bottom of our website, and you guys will get instant access to all the relevant market data.
So surveys show very widely that people feel uncertain about the economy, and they do point to tariffs in that role, and has come down a little bit. And if you talk to businesses, I talked to an unusually large number of business people in the last couple of months, and the feeling is a little better now than it was. They're getting on with it and feeling, I'd say surveys are still showing depressed sentiment, but it's moved up from where it was.
I would say, Mr. Chairman, that may be the case at this moment, but we all know that we could wake up any morning and see another tweet, and that could change dramatically. So I appreciate your efforts to try to do what you can to meet your dual objectives at the Fed. Thank you, Mr. Chairman.
Yes, sir. Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being here.
Just a reminder, if you guys don't know who Senator Loomis is, she's the #1 supporter of crypto in the government. She's the reason for all the crypto regulations getting passed through. Senator Loomis is a sweetheart, and I met her at BitcoinCon. Absolute gem.
Focus on bank supervision. First of all, I do want to thank you and Vice Chair Mickey Bowman for ensuring reputation risk has been removed from the bank supervision process. It was very arbitrarily used by those who were supervising. On January 27th, 2023, I'd call it the high water mark for Operation Choke Point 2.0. The Federal Reserve Board, in coordination with President Biden's White House, executed a coordinated attack to isolate the digital asset industry from the banking system. And while the Fed has taken steps to adopt a more balanced approach to digital assets, which I appreciate, the legacy of January 27th, 2023 remains with us today. So I'd like you to look at this quote. It says, issuing tokens on open, public, and/or decentralized networks or similar systems is highly likely to be inconsistent with safe and sound banking practices. So my first question is, do you recognize this quote?
Yes, not super clearly, but yes, I do.
Because it's from the Federal Reserve Board's policy statement on Section 913 of the Federal Reserve Act, which was formally adopted by the board on January 27th, 23. So now, Chairman Powell, I want to show you another statement, and I'm sorry if you can't see it clearly, I'll read it to you. It's from the Genius Act, which just passed the Senate by a vote of 68-30 last week. And it takes the opposite position to the board's policy statement on issuing stablecoins on an open, public, distributed ledger. So my question is, what has changed about the risk of stablecoins since the board adopted its policy in 2023? And now that the Congress has weighed in, at least the Senate has weighed in and sent the Genius Act to the House, does the board plan to withdraw the policy statement on Section 913?
So I think what has changed is, if you go back, that's a couple of years ago, that was the period of high profile failures and fraud and that kind of thing. And what's happened is, I think, the industry is maturing, our understanding of it is improving, and in a sense, it's becoming much more mainstream. So all of us are revisiting, the things that were done during that era, and I think the current view is that that it's appropriate for, I mean, it's always been appropriate for banks to choose their customers and to be able to undertake activities as long as they're safe and sound. In terms of, I think I have to get back to you on 913. I think it's a broader thing that has nothing to do with crypto, but that was a piece of it. We are looking at and withdrawing many of our pieces of crypto guidance from that era, though, as you know.
And I appreciate that. I hope that by withdrawing the guidance, that you're also instructing and admonishing your bank's supervisors to when there are efforts to regulate banks that provide too much discretion to bank regulators to pick winners and losers from among the customer lists, the loan portfolios of banks. It's antithetical to the American system of banking. And I do think that there was that kind of discretion unleashed on banks, and it had a negative impact, a real chilling impact on banks as they selected and banked certain industries and then debanked other industries and other people during the last 4 years. So taking the guidance documents and policy statements out is important, but also guiding the people that there are changes now and that they can no longer use their own subjective biases towards DEI and ESG and other things in supervising the banks is also a critical component of bank regulation.
I agree completely. And as you know, Vice Chair Bowman is actually a former bank supervisor, so she's very well placed to do.
They keep plugging her. She will be the next president. I promise you, she'll be the next Fed chair president. Chairman Bowman, she's on the way. He keeps big. This is like the 20th time he's mentioned her.
The importance of those changes within the bank supervision function at the Fed.
We're going to have to move on.
Thank you.
I'm assuming your answer is yes. Senator Smith.
Thank you, Mr. Chair. Good morning. Good morning, Chair Powell, and welcome to the committee. So Chair Powell, a few months ago, you issued a warning about the trajectory of our national debt. Speaking at a New York Times event, you said the U.S. federal budget is on an unsustainable path. The debt is not only at an unsustainable level, but the path is unsustainable. And we know that we have to change that. Would you still agree that that is true?
Yes, that's the one thing that I would always say, and that my predecessors have said, and that's the kind of the only thing we say about fiscal policy.
Exactly. And I would agree with that at a time when Americans are struggling to figure out how to afford their lives and have low.
You guys hear the inside joke? There's never been a time where the government budget has been stable or has made sense. It's been a sham since Bretton Woods, since we took the global reserve status with the dollar. There really hasn't been a sound monetary policy where the government is only spending as much as they bring in. And so he's like, my predecessors, Jerome Powell's been here since before Trump won. And then Janet Yellen was there for like 4 years. Then we had Bernanke there for like 8 or 12 years or something. All the predecessors, everybody has said that the fiscal policy, which is the government's just unsatiable appetite to take on debt and to fuck us over in the future, is unsustainable. This is the one thing that every Fed chairman will agree on, no matter what the circumstance, no matter what the market dynamics are like, no matter who the Fed chairman is or the political leanings. They can all agree on one thing: the government does not know how to fucking spend our money.
Confidence in the economy to add to the deficit now, as the big beautiful bill does, just strikes me as unsustainable. Now, I'm not asking you to moderate between Republican and Democratic policy differences on the big beautiful bill, but would you agree that the big beautiful bill adds to the
She said, I'm not going to ask you to comment on the political leanings of this really political bill that's coming out, but can you comment on the political nature of this bill that's about to come out?
Is it based on the data that you've seen?
I'm just not going to comment on on
There he is.
reconciliation.
Okay.
Jerome?
Well,
I'm going to miss
I
Jerome
just
Powell,
point out
man.
to my colleagues that the CBO says that it adds to the
Like, I feel like Bowman has her head on straight. I'm going to miss Jerome Powell. Let's be honest. Let's enjoy Jerome Powell while he's here. Let's appreciate him for his service.
Committee for a Responsible Federal Budget says that it adds to the deficit. The Penn Wharton budget model says that it adds to the deficit. And even some of my Republican colleagues, Senator Johnson, Senator Paul, say that it adds to the budget. And as Senator Johnson says, it's wrong and immoral. So I appreciate that you won't comment on any of this, but let me just ask you an economic question. Can you talk a bit about what impact a rising deficit has on our goal of lowering costs for Americans, especially in the Trump tariff environment that we are in right now?
I'm sorry.
What impact does a rising deficit have on our goal of lowering costs for Americans, particularly when we are in a this Trump tariff environment, the unpredictability of that?
So I think it's likely that when markets are pricing longer term treasury securities, there's something baked into that in the market's thinking about interest rates, what should be the appropriate interest rate, but it's hard to unpack that with any precision.
These are factors that have lots of interplay between one another.
Yes.
Yes. And Chair Powell, could you just comment briefly about the sort of the potential risks of stagflation, where we have slower growth and higher inflation? I know this is something that the Fed guards against. And could you just comment a bit on the risks of that and what it means for regular Americans trying to afford their lives?
So we're not seeing that now.
Yeah.
It isn't really the base case that that's what we're going to see. But of course, that's a very difficult thing because, a stagnant economy wants more stimulus, but an economy with more inflation wants less stimulus. So
Right.
It puts the central bank in a hard place. We've warned of it, but it's honestly not something that we're facing or that we expect to face, but it's something we're monitoring is what's happening.
Thank you. I want to follow up on a question I asked you the last time you were before the committee. I asked about the impact of severe weather events, otherwise known as climate change, on home insurance costs. And you testified that, I think you said, if you fast forward over 10 or 15 years, there are going to be regions of the country where you can't get a mortgage because of the, you can't get a mortgage because of the impact of the challenges of insurance companies just not being able to provide that.
I don't know if you want to call it climate change. I think that word is politically charged now, so like people kind of have a thing about it. But yeah, in Florida, this was a big issue. Like insurance providers stopped providing disaster relief insurance or whatever. It was natural disaster insurance against the floods because it was so common. And then I think a lot of the insurance providers stopped providing residential homeowners insurance in California against wildfires because they were just paying out way too much. And so this is a real deal where if you're paying for insurance to protect you against these natural disasters and the companies are like not paying and then they're just dropping clients and stuff, that's a pretty big deal. And it's going to affect a lot of people and their decision to like, yeah, you want to move to Miami, but if your house is not insured and like on any given day on a Tuesday, God can decide to smite Miami for all of its degeneracy, your house is cooked and there's no insurance benefit on the back end of it. So I think this is a bigger issue than we're really talking about, but it really only affects, it affects everyone. The Midwest of America, the tornado belt, the earthquakes in the West, fires, floods. Yeah, insurance companies got to stop fucking around.
Since February, when I asked you that question, home insurance rates have continued to climb. A recent analysis about climate risk from First Street found that financial burdens from severe weather are driving up household costs and triggering increased mortgage defaults. Now it's at about 8% now, but they project that by 2035, 30% of all foreclosure losses would be related to.
Dude, just look at America's reaction after the CEO of United Health got shot. Somebody got assassinated in broad daylight, head blown off. This guy's got a family, he's got kids, and people were celebrating, bro. If that doesn't tell you how frustrated people are with the insurance system, then I don't know what will. People were celebrating a broad daylight assassination
Component of inflation,
in the streets of New York City.
place where housing costs are rising higher than the general inflation rate right now.
Many things are driving up housing costs. It's
Yes,
not-
that's
it's not-
true.
It's of course mortgage rates, but it's also, zoning costs and things like this for properties that are near the water.
I'm gonna have to hop off in about 5-10 minutes. Looks like either the market's gonna come back down to the bottom of the range or it's gonna fly. So we have shorts at the double top, we have buys at the bottom of the range. And I'm sick and tired of Jerome Powell saying that high interest rates has no effect on housing costs. That might have been true in like 1990. That's what I learned in economics school when I went to college. They taught us that there's an inverse relationship between interest rates and housing prices. So like if they raise rates, then prices will come down. Because like if rates are really high right now, none of us can afford a house. The only way for me to like for someone to sell their house is to drop their prices. So that's kind of how things used to work. But right now, because of the demand for housing, but the builders are not building. And so that's going to drive the demand higher and the supply lower. And whenever the demand outpaces the supply, markets 101, if the demand is higher than supply, prices go up. And Jerome knows this. So I keep stuttering for the 50th time. He's tried to pass on responsibility for the housing crisis here, which let me be honest, like the Fed can't just drop rates because houses are expensive. That's not what I'm saying, but at least acknowledge it and tell the government not to spend this $2 trillion so that the housing market doesn't get even worse. Give some kind of guidance, acknowledge it, and be honest, because this is real stakes versus like, well, it's not really, I wouldn't say that interest rates are the reason for high housing prices. Bro, this isn't like you're not getting in trouble by your teacher in school. Like you're trying to bullshit your way out of an excuse. This is you're on your way out. You got nothing to lose. Your legacy's still intact, but we got real fucking stakes. So that's what I'd like to see. Marcus, microphone, butter.
Particularly, for example, we spend some time down in Florida. In property insurance just gets more and more and more expensive, and to the point where it also almost makes sense to self-insure. And that's because of just big losses. Companies are just putting that in their models, and they're charging what they need to to charge to make a return. And if they can't get that, then they'll leave that state. So that seems to be what's happening.
I know I'm out of time, Mr. Chair. Thank you.
You're always polite. So,
Minnesota.
give me 22 seconds. Sis. Thank
That's
you,
why
ma'am.
they call me the Velvet Hammer, sir.
I didn't say that you weren't harsh as well. You're just nice when you do it.
Yo, she got Jerome Powell blushing, yo. The Velvet Hammer. Hey, yo. What kind of stage name is this?
Like just right
The Velvet Hammer. Dude, I'm not even going to make the jokes I want to make. I got shit to do.
now, see?
But Velvet Hammer, you guys just do the fucking, do the math. You guys can make the jokes in your head.
Senator Moreno, remind me not to.
I did re-enter when the market hit my break even. So as soon as the market hits TP1 again, which it just did, I'm going to close one more of those contracts, protect the trade, and we'll probably stay on here for another 5-10 minutes while this trade continues to cook. And then I got to get off, start packing and shit. Man, I got a flight tomorrow. I got a 17-hour flight tomorrow, people. I'm not going to sit here and like complain about having to fly around the world, but I'm flying into the war zone, into Lebanon, where the shit is. You feel me? I love my country. There's bombs flying. The ceasefire, flimsy. If you guys have ever traveled and you know how houses are built or buildings are built overseas, concrete, cement. If I can lean against it, shit leans back on you. In America, it's paper. It's paper. I don't know. It's like that thing that the stuff that you put inside of the bag when you're sending a gift, and like you want to wrap the gift in like something in the paper. That's what the houses in America are made of. Okay, Roy, what the fuck? The peace deal, the ceasefire, is as flimsy as the building materials in American houses. That's my case. And if they were built more like I was in Colombia, right? I got real mad, punched a wall. I'm gonna punch a wall. Punched it. I learned quick. We're living in the gingerbread house from Shrek in America. That's the gingerbread house. We're one cup of milk away. It's getting cooked. So the ceasefire deal in Iran is as flimsy as the paper that you put in the bag when you send in the gifts. It's as flimsy as they build the houses in America. That's how flimsy the ceasefire is. I'm stepping into the airspace, people. That's where I'm flying in. I might never come back. This might be the last time you hear a recording from me. All right. And so I said all of that dramatic hyperbolization to say that I have about 5 minutes left on this stream before I actually got to go pack and shit because I've been procrastinating. So if you guys have questions, comments, concerns, throw them up in the next 5 or forever hold your peace. Did I really just do that entire tangent just to say that I have 5 minutes left on the stream? I did. I did. And you were a witness. You let it happen. All right. Now let's go back to Jerome Powell.
They give Tina a compliment in the middle of the bank.
The
Chairman Powell,
velvet hammer.
just want to make certain I understand this correctly. Control inflation and maximize employment. That's it. 2 things, correct?
Yes.
So let's take one at a time. Maximize employment.
He just summarized the whole Fed, by the way. You guys didn't get an economics degree. Prevent inflation, maximize employment. The entire function of the Fed by Senator Moreno. Senator Moreno off to a good start. You can see the staffer smirking in the back. You know he wrote these questions. You know he wrote these points. Oh, he was cooking. He was cooking.
Do you care if every American makes minimum wage or makes a livable wage? Is that something that factors into your thought process? In other words, we have full.
Look at the staffer, bro. He knows he cooked on these questions. I'm gonna guess this guy's a Democrat, but this whole thing's a charade anyway. We might as well enjoy kind of breaking down the play-by-plays.
Full employment, but most Americans are on substandard wages. Does that change your calculus?
Does it change my what?
Calculus. Does it? You can't. In other words, is it full employment? Is full employment? Every American has a job, but they're making minimum wage versus having a family-sustaining wage. Does that matter to the Federal Reserve?
It would matter to the country a lot.
I'm saying, does it matter to the Federal Reserve when you're making your decision?
Honestly, we don't really have the tools to affect that.
Right. So it doesn't factor in. Now that's different than us. The people of this country elect us to make certain that their wages are higher than inflation. And by the way, the records show that real wages are up this year. So we've done that, not the Federal Reserve. Second piece of it is, let's talk about inflation first.
We've helped control inflation, which
Well,
is
we're
part of that.
going to jump right into the inflation conversation. There's different kinds of inflation.
Did we just get a little bit of energy from Jerome Powell? Did he just make a fucking sound? Did Jerome Powell just show a pulse? Yo, when you try to take credit away from the Fed, that's what triggers Jay Powell. More energy. More energy today. So I like it. I like
There's
this Jerome
not
Powell.
witnesses to inflation. There's key actors to inflation. Would you agree?
Sure.
Okay. So let's talk about the actors. Did you comment during COVID lockdowns that was a bad idea? Because you're shutting down the entire economy. It's not a button. I hit the button. You can hear me. It's on and off. COVID wasn't that. We just shut down the economy. Any comments on?
No, look at the staffer's face. You know that he was off the Addy, 5 a.m., cooking these questions up.
Higher than inflation. And by the way, the records show that real wages are up this year.
I'm going to show you the face. I'm going to show you the staffer's face. Because by the way, I when I worked in Congress, the congressmen never wrote their own questions, never did their own briefings. It was the legislative staffer, the legislative director. They would do the work, but then they wouldn't even do the work. They'd pass it on to me. And then you would have the chief of staff approve it and then review it to make sure it's consistent with the platform of the representative. And then they would get out their talking point questions. Marcus, I'm kicking. You're in timeout. But if I tell you to mute the mic 7 times, that means you have this thing on mute anyways. All right. So the staffer is the one that writes all the questions and even writes their bills for them. The congressman just has a chief of staff that's there to confirm that everything that's in this bill is consistent with their platform and their policies. Look at the staffer's face. He's cooking.
So we've done that, not the Federal Reserve. Second piece of it is, let's talk about inflation first.
We've helped control inflation, which
Well,
is
we're
part of that.
going to jump right into the inflation conversation. There's different kinds of inflation. There's different causes. There's not witnesses to inflation.
Yo, this guy's cooking.
There's key actors to inflation. Would you agree?
Sure.
Okay. So let's talk about the actors. Did you comment during COVID lockdowns that that was a bad idea, meaning that you're shutting down the entire economy? It's not a button. I hit the button, you can hear me. It's on and off. COVID wasn't that. We just shut
He brought a prop.
down the economy. Any comments on that?
Of course not.
Okay, so you didn't comment on that. Vaccine mandates, something that my Democrat colleagues loved. If you don't get the vaccine.
Now, this is a cheap trick. We talked about it yesterday. When you ask the Federal Reserve chairman about something that's outside of their purview, they really should not weigh into political. Like, they're supposed to be apolitical, and so they're not supposed to talk about Biden's regime or kind of compare relative policies between both regimes. So this is a cheap trick, knowing that Jerome Powell can't defend himself, but I'm kind of here for it, because printing $15 trillion did lead to inflation, and I just want Jerome Powell to fucking say it. We printed a lot of money, and it made prices go up. I just want him to say it. I just want him to admit that it's true.
You're a terrible human being. You can't go to work. In fact, Joe Biden was overruled by the Supreme Court because he said that if you work in a company with more than 100 employees and you don't get vaccinated, the company has the ability to fire you, unless you prove that you're negative on COVID. That obviously is a supply chain shock. Wouldn't you agree? If I'm running an assembly line and now I have to put my people 6 feet apart, and now I have people quitting or not coming to work, or I have to fire them, that's a supply chain shock. Wouldn't you agree?
I mean, it's a medical thing that you.
No, but it's a supply chain shock. I'm not asking you to make a medical decision. I'm asking you to make a Fed decision on inflation.
Way outside anything we would comment.
But it affects inflation because supply.
It didn't. In fact.
Are you saying that?
Yo, Jerome Powell, he was ahead. He said, we don't comment on that. And then he just fucked up so bad. That little slip right there. That saying that we should literally get supply and demand, the entire productivity and GDP of the world to go to zero. For the first time ever, the world has not gone to a halt. The machine has not stopped one time since the machine started in after World War II. We stopped the machine completely. And he's saying that had no effect on inflation. He just gave this guy, Senator Moreno, something to sink his teeth into. And the staffer, with that little smirk on his face, knows he's about to cook.
Supply chain shocks don't affect inflation?
They do, but
they didn't. So that's clearly one. If you ban the export of liquid natural gas, which is going to cause the commodity price to go up, would that supply shock not also cause inflation?
Potentially could.
Yeah. So, and now
we're watching Pearl Harbor. We're watching Pearl Harbor right now. This is what we just did to Iran 3 days ago. Is this assault on Jerome Powell? Is what you're witnessing right now in front of your face, in front of your eyes. He hit him with the 3 whammies. Did your Fed policies affect inflation after COVID? Were the COVID policies the reason why we have inflation today? Hit him with the, oh my.
Member loves to talk about billionaire corporations, that are going to get away with paying taxes, right? Who pays corporate taxes? Like, who pays it? Is it like some obscure?
The majority of corporate taxes are actually paid by small businesses. The majority of employment in America actually happens because of small businesses. Just throwing that out there.
Wizard of Oz character behind the curtain that is a corporate entity that pays taxes. Who pays taxes?
I mean, ultimately, it's shareholders and customers.
So it would be, I'm going to read you a line. You tell me this is accurate on taxes. It's not possible to know in advance precisely how the costs will be shared for taxes. I added
Correct.
that.
I would
But
agree.
it is highly likely that consumers will pay a meaningful share. Meaning if the ranking member has her way, let's just tax corporations at 100%. Why not? Be fantastic, right? No, nobody would want to start a company, but that aside, that cost would be added to consumer products, correct?
A tax or a tariff? What are you talking about now?
If the income tax for American corporations goes up, they will share that tax burden with their consumers. True or false?
Yeah, ultimately,
Yeah, so then taxes do raise inflation, but you don't comment
I
on
mean, they
it.
have.
And you don't,
That's
but you
just
don't,
not true. I mean-
I got,
Dude, Jerome Powell, why are you digging yourself deeper? Yo, you guys are probably at your job right now. I say this all day. You're sitting at a desk, you're on the way to a next project, you're on the way to a meeting, you just came back from a meeting, you're listening to this at home, you're taking care of your kids. And I think all of you at this point watching this streams know that these policies are directly related to inflation. Why is Jerome Powell trying to run away from this so badly?
Empirically, it's not true.
the chairman's gonna beat me up in 56 seconds. So, but you sent me a very nice letter, which I appreciate. And it says the Federal Reserve plays no role in commenting on trade policy.
If the biggest driver of prices right now, like if the war in Iran had escalated and we had gas prices at $10 a gallon, that's going to be the single most important driver of inflation out of any other metric, bar none. That's the number one thing on the list. And so if the Fed's job is price stability and is to protect against inflation, don't you guys think that they would have to pay attention to tariffs? Like, I know he's trying to stay apolitical, but like the logic just doesn't make sense. If like there's these wars and the trade and the tariff beefs are going to make goods more expensive here, and your whole job is to make sure that prices stay stable, how the fuck can you not comment on this? Do you guys understand what I'm saying here? Like, you can't even pretend to somebody who doesn't know anything about economics. You can't even pretend that these two things are not related. It's obviously part of your job. It's going to affect inflation. And so you should be paying attention. You should have way more to say than it's not our job to comment on it. Like, you're not, are you the cleanup crew or are you the Wizard of Oz running the whole show? Are you the cleanup crew that the government mismanages money, overspends, fucks things up, and then we go in here and we fix it every 7 years, or the Fed fixes it every 7 years in the form of, Fed intervention to stop these recession during the natural business cycle? Is your job the cleanup crew like Mike in Breaking Bad? Are you the cleanup crew? Or are you the Wizard of Oz running the whole show? You have the power of the printing press. You're the one issuing debt to the government. You're the one issuing debt to these multinational corporations. You're the one issuing debt to all the commercial banks because they now owe you. You're the one that has the power over all the money because you tell the banks how much they have to keep, how much they have to spend. Are you the Wizard of Oz or are you the cleanup crew? You cannot be both.
So you don't comment on supply shocks. You don't comment on tax policy, which clearly affects inflation.
Welcome.
You don't comment on the demand pull. You just said now that we should forgive student debt. Why is a person that goes to Harvard that gets a gender study?
I know I keep interrupting. Dude, Senator Moreno, I'm about to move to whatever state. No, that's a bullshit. That's a complete lie. But this is what I want to see. I want to see congressmen asking real questions, like the power of the follow-up. What do you mean by that? Do you guys know how many things in life would be solved with one follow-up question? What did you mean by that? Joe Rogan does that shit the best. He'll ask somebody, well, what do you mean by that? The person just falls apart. Tucker Carlson showed a masterclass on this against Ted Cruz 2 days ago. Ted Cruz will be like, well, I don't really know the population of Iran. And then Tucker will be like, well, what do you mean by that? You're trying to overthrow their government. Shouldn't you know the population? The power of the follow-up question could solve all of our problems, but everybody is literally a sellout. And that's why I appreciate things like this, have to point it out.
Studies major, pays Harvard obscene amounts of money because professors are grossly overpaid there. Is that person better than a working class Ohioan that is a plumber but can't afford a car because interest rates are too high and car prices have gone up? Why don't we forgive that person's car loan instead of forgiving their student loan? But you don't comment on that. You comment on tariffs. So I'm going to just show you.
I don't comment on tariffs at all, actually. I comment on
only
inflation.
commented on tariffs. You've
I'm
only
not commenting on the
tariffs.
wisdom of tariffs.
The chairman's over.
All right, see, this is where he lost me. You can never idolize anybody. 5 seconds later, guy completely throws his entire argument out the window. Jerome Powell, my biggest criticism is that he doesn't comment on tariffs enough. He doesn't comment on any external policies enough. And this guy's like, you only comment on tariffs. No. Powell has commented on a lot of DEI bullshit. He's commented on a lot of anti-Trump. This is, again, you never said shit when Biden was fucking up the economy, but now you're talking a lot when Trump is here. That's what this whole thing has been for the last 3 hours yesterday and the past 1 hour today, is you were mad quiet when Biden was driving us off a cliff, but you seem to be very loud now that Trump is in office. What's up with that? Is basically every question. All right. Now the market is breaking out of this range. Very likely that we go up for the double top here for the 88.6. So there's an opportunity there for shorts. If the market does break back down under the range, I would look for a Model 1. This is for the folks on Zoom here, for the members. I would look for the Model 1, and then it's going to probably break through for Model 2. You can take the Model 1 entry and the Model 2 entry. The Model 1 entry, in and out, protect your trade. In and out, close the whole thing. Comes back down for Model 2, enter, pops back up above the range, protect the trade. If this thing wants to rip back bullish, we're good. We are at all-time highs, people. This is typically when the market comes back for retracements. And so I know that the market momentum and the trend is bullish. And so by definition, we kind of have to respect the trend and trade in that direction. With that being said, location is crucial. We're pretty close to the end of this kind of wave. And the closer we get to the top, the sharper the drop. And so what I would say is be very mindful of the buys, keep your risk management as a priority by reducing your risk until we establish some new structure. And eventually we will get a big retracement, but I think the momentum is on the buyer's side for now. So if you're going to take these trades in and out, don't overstay your welcome. Remember the 10 rules. If you guys are watching this on YouTube, drop a like and subscribe. If you guys want to learn how to trade the NAS 100, whether it's futures, CFDs, options, whatever you decide to trade, the market is the market. The structure is the structure. The price is the price. What you do with that information, whether you want to put more money in your 401k or you want to enter a leveraged trade on a margin broker account, it's up to you. But learning how the market works will be an advantage for you, especially as the American technology sector becomes the largest, well, it already is, but really becomes the most dominant force in the world. We have the Microsoft, Apple, Google, Amazon, all of the Tesla, all the leading companies, NVIDIA, all the leading companies in the world are on the NASDAQ stock exchange. And so I do think that NASDAQ has a very prosperous future, especially the next 10, 15 years, knowing how this market works and being early and kind of riding this wave up to new highs for the next 10 years is a pretty good business model for you to get rich and retire your family, ain't it? So learn the strategy early. It's $500 to change the rest of your life. Don't sleep. And that's all I got. All right. Happy, safe trading. Don't be a bum. Tell somebody you love that you love them, and get back to your work. Go do your job well. And then from your 5 to 9 shift, get the fuck back to work and focus on your trading and be better and be there for your family, because your 5 to 9 shift is more important than your 9 to 5. You got to work harder on yourself than you do on your job. And the best time to get started on anything was a year ago, but shit, the second best time is now. All right. Happy and safe trading, everybody. Take it easy. Peace. Members, that was a fun ride. Break even got hit. I took like fucking 17 trades today.